Hi, everybody, and welcome to another episode of Capitalize on Retirement with myself, David Domenick, my brother Brandon Domenick, and we're joined today with Joe Palimino, our healthcare expert and partner here at Capital Way. So as we approach open enrollment, or what we call Medicare season, and Joe gets pretty busy,
A little bit.
we wanted to give you guys all some information. We've done this podcast in the past, but we wanted to revamp it. So we want to talk to you about, first off, this is just going to be education. So we want to talk about where health and wealth intersect. That's kind of going to be the foundation of this podcast as we bring it out. But today, Joe, let's start with the annual enrollment period. Make sure everybody knows what that is, when that is, and what they should be looking out for.
Primarily, the annual enrollment period runs October 15th through December 7th of every year. In the annual enrollment period, it gives you the ability to change primarily Advantage plan to Advantage plan, or drug plan to drug plan, supplement plan to Advantage plan. That's where most of the changes are made. In that, what you want to start looking for is your annual notification of change. That way you can see exactly how your plan changed, the changes made in the plan, so you can decide if you're happy moving on in the same plan or you want to make changes to your current plan to another plan.
So that annual notice of change is pretty important. When's that come out?
It should be coming out any time now, mid to late September through early October.
What should people be doing during the open enrollment period?
Setting an appointment with me. No, all joking aside, if you work with us, if you don't work with us, set an appointment with the person that you do work with. Make sure that you are looking at those the changes, making sure that the plan is good for you. Have those evaluated, especially when it comes down to your prescription drugs and the changes that are coming there. Drugs is where I see people who do this on their own hurt themselves the most.
Yeah, I was actually going to say that, Joe. So I actually had a client a couple weeks ago ask me that question. They were like, I've been on a lot of different medications lately, and I'm not sure if my plan I think they said my plan doesn't really cover some of these things. So if you actually look for a different prescription drug plan, could it potentially cover some of those other things that, their situation changed? So that's why they were looking for something that would cover that.
That's a great question, but absolutely. Certain plans cover different drugs. Some plans cover plans that other plans do not cover. And even the bigger issue is some plans tier drugs differently than other plans tier them. So it might be a tier 1 on a specific plan, where on another plan it's a tier 4. And the difference in that could be hundreds, even thousands of dollars. So yeah, it's a big thing to do that, to look at the plans, and that's exactly why, to save yourself money or to have a drug covered that hasn't been covered in the past.
And the only way, it's my understanding that during this open enrollment period, we're making our decision for January 2026, but that is the only time we're able to do that, correct?
For prescription drug plans, yes. For Medicare Advantage plans, from January 1st to March 31st, there is an OEP. So you can make a one-time change if you're unhappy with the selection that you made during the AEP. But for prescription drug periods, I'm stuttering.
For prescription drug
plans specifically, it's a 1-year hold, and yeah, that's it.
So that open enrollment period is kind of critical to all of this, because it allows us to make prescription drug plan changes. The companies change their formularies every single year. Okay. And then we do have a fallback option from January on if needed.
On Advantage plans. And yes, it is super critical. Number one, even if you're on an Advantage plan, would you want to be inconvenienced with having to make a change?
No, not at all.
No. So you want to get it right the first time and go through the year and enter the year with peace of mind.
No, I agree. I mean, it's all about planning, right? We talk about that on our end all the time. You have to have a plan in place.
Careful planning is it.
That's it. That's all I have. Now, Brandon, what's the next question we have for today? Some of the market updates. You want to hit that one, or you want me to take it?
Yeah. So I know, on here there's a lot of talk about plan consolidation and carrier adjustments. You have fewer choices, but there's a chance that they reassess, and you obviously got to review your provider network. So any takeaways from that, Joe?
Yeah, I mean, there's always going to be market updates. Like, for example, Part A is going to increase. Again, we don't have those numbers firm yet to throw numbers out there. Part B is also going to increase. It was 185. The tentative number for B, for the base, is 205 a month. But with all these things changing every year, it's important to stay in the know. Other things that are important are some supplemental plans are going to drop out of the market, right? So they have to have enough premium coming in to sustain that. So you want to make sure you're with a very strong company, as some carriers are going to pull out of the market. Other things are going back to prescription drug. I believe in 2024 in our zip code there was 45, rough estimate, prescription drug plans. Last year it dropped to roughly 35. So I would expect in 2026 you're going to get they're going to condense the market even more. That could be good, that could be bad.
Why are these companies pulling out? Like, why are they dropping out? You'd think the Medicare space would be profitable for the insurance companies.
I actually heard that. I read an article the other day, and they were saying that a lot of these insurance companies, like in regard to the Part B premiums, $185 a month. Well, if you're paying for an insurance company and that premium is not very expensive, but you have a lot of people that are, maybe you have a small network. There's not a ton of people in that network. Well, if somebody has one catastrophic thing, that insurance company's coming out of pocket and they're only getting $185 a month or whatever that may be. So I just feel like some of these smaller companies can't really handle those big claims.
Right, that's exactly what I was trying to say is the body count on the plan has to be able to support the plan itself and handle the claims. So that's one really good reason why. The other is a lot of these carriers are running at a loss. So a big reason that they're running at a loss is because, and I can't wait to be done saying this, is COVID, right? So there were very low claims during COVID. So these Advantage plans change every year, right? So in the change, they're building it to a lower amount of claims. Well, right now, we're running very high numbers, between 65 and 70, of people that are waiting to come off of group plans or individual plans to start to use the benefit. So they're waiting for their knee replacements, their hip replacements. So utilization is really high. Now these plans are playing catch up, and they're having to build backwards, and with utilization high, they're forced to adjust the premium and raise the internal costs or the external costs in the premium more than they have in years past, especially since no one was using it in COVID.
I think that's a big point, not just for this kind of annual enrollment period, but as people are electing and you're helping them make that decision on should I go Medicare Advantage or Medicare Supplemental, that they're picking the right carrier, because it used to be oversaturated. Brandon mentioned they couldn't pay the claims because they had so little premium volume coming in. You get one person on dialysis, which I think is $40,000 a month. Well, that impacts every other person on that plan. So make sure you're going with someone who, to use your words, has a high body count. I think that's important. Moving on, Joe. What else are we missing? One other thing I wanted to talk about. We talked about Part B premiums increasing to $205 a month. IRMA limits are still pending. We'll kind of hit on that. Let's talk about health and wealth integration. And then I want to let's hit on prescription drug plans. I know prescription drug plans are changing. You want to hit us high level on that?
Yeah, the drug plans are changing. Things that they're predicting are realignment of some formularies. They're predicting that Part D monthly premiums for standalone drug plans are rising. We can't get into product here, but I've already seen some more than double for next year, in anticipation. Other thing is the deductible, the drug deductible is going from $590 in 2025 to $615 in 2026, so you're seeing a little rise there. The out-of-pocket maximum is going from $2,000 flat to $2,100, which to me is not a major shift, but there are changes coming there.
Is the Part B premium increasing, or is the deductible on Part B increasing?
The deductible is increasing. Off the top of my head,
we can't talk about it yet.
Yep.
Yeah, I mean that's a big difference. I mean, when you look at the baseline Part B premiums being $185 a month versus potentially $205 a month, I mean, that's a big increase. I mean, so there's a lot of increases. I think it's more important now than ever to review it, see if you can save any money on other things.
I mean, that's why you reviewed. The money's better in your pocket than in the pocket of the insurance carrier.
Yeah.
Get your trucks covered, and again, shop.
I agree. I think one final thing to touch on, and we all talk about this all the time, the three of us, our team here, but I think it's something that is probably misunderstood in the marketplace, or maybe underserved is probably the better word, but the health and wealth integration, right? We understand how IRMA surcharges impact the families that we serve and why tax planning is so important. So do you want to hit on what IRMA is, and then Brandon, if you want to kind of touch on how we handle that from our side and the things that we help plan for?
Yeah. Income is your income-related modified adjusted amount, right? So what IRMA does is it takes a look at your household income if you're filing joint, or your individual income if you're filing as an individual from 2 years back. So right now the year is 2025. The base limit for the IRMA is the Part B monthly premium, which is $185 a month. So depending on how you file, joint or individual, if you file individual and you made $106,000, again, you're at the 185. However, if you made 106 to 133, your IRMA jumps to $259. Add another $1,370 for your Part D prescription. Now, I don't want to go the whole way up the IRMA chart as it increases, because you can get this chart online at our website. But what it does is take a 2-year look back. So 2025, again, is looking at how you filed in 23. January 1st of 2026, it'll look back automatically to what you filed in 2024. This IRMA bracket will automatically make the adjustments for you to be paying the appropriate Part B premium every year.
Sorry.
No, I was just going to throw out there, because everybody asks this, SSA Form 44, you can appeal your Part B premium, because everyone wants to know that. So if you would retire and your income would drastically come to a halt, or it would lighten, then you're able to file that to get yourself at the base level or the lowest level you can.
I think that form is very important. What's that form again?
SSA Form 44.
Most people don't know about that. I think that's huge, and I think Brandon's going to talk about the tax planning to reduce that, because we call this a stealth tax, right? If you're paying an extra $1,000 or $2,000 for Medicare, that is a form of taxation.
Yeah,
right?
For the same benefit.
For the same benefit.
Yeah. And I mean, I think what this comes down to is actually having a team around you. I think that's why it's so important to have a team around you, because I can't tell you how many times that we as financial advisors work with you, Joe, on the health insurance side, but then we also work with our accountants to try to figure out, okay, here's how much income they need. Joe, you get them on the right Medicare plan, but then we also work with the accountants to figure out how much more income can they have. And then we tap into different income sources. So maybe if they're already at these limits, we tap into a non-qualified account, or we tap into their Roth IRA to not increase them above these limits. So I think that's just why it's important to have that team around you.
Yeah.
Couldn't have said it any better. Tax planning and just having a team is huge.
Planning.
Yep. Health specialist, tax specialist, your advisor, right? One other thing I wanted to throw off the cuff, and this isn't about Medicare, but it's health planning in general. And I just thought about this, but we have a lot of people who do retire before Medicare age. So Medicare age is 65 for almost every American, unless you're on disability or some other situation. But we have a lot of people who retire early, and I'd probably say, Brandon, you'll likely attest to this, but I'd say the number one concern for people retiring early is health care. But in the state of Pennsylvania, we have pennies, which is our subsidized healthcare system, and that is all income-based. And that goes back to exactly what Brandon mentioned. You have a team of people helping you. So we have Joe helping with the healthcare there. We have our CPAs helping us on how can we keep income low, and not necessarily keep it low, but through tax filing purposes, kind of arbitrarily keep it low. I think there's ways that we can help families retire early by having those two things integrated there as well.
That's the number one thing, at least that I hear. People say, I don't want to retire until 65 because, I want to wait until I'm Medicare eligible. And it's like, if you have enough money to retire at 62 and you're just waiting until 65 because of Medicare, well, maybe you just need a plan that shows you actually can retire early. Why waste those 3 years working when you could basically have those 3 years to really enjoy your retirement years?
And to piggyback that is, it is income-based, and it's projected income for current year. And the other thing I'll say with that is the health plans in our area, in our zip code, are Highmark and UPMC. So it's not like you're buying some health insurance from a company that you don't know or a carrier you don't know. There's two very credible carriers in our area that put quality plans out there to the marketplace.
Yep.
And for the most part, not every plan exact, but it's the same plan that you'll gather from the marketplace or the ACA that you would going straight to the carrier.
Yeah, and I don't want to put numbers on it, but just to kind of give you guys an idea, we had a client who was making a lot of income. If they were to retire with that income, they would be paying over $1,000 a month for the same health insurance plan that, because of the tax planning that we did and some of the resources, they had different accounts. They had Roth IRAs. They had different accounts that wouldn't raise their income. They paid $200 a month, roughly, for the same exact plan that they would have paid $1,000 a month for. So I just think it's important to have all that stuff and just understand how it works. Just one other thing, I wanted to talk tax planning. Charitable deductions and charitable giving. Like, we had a client who was close to the Part B. They were getting above the IRMA limit. So that first IRMA limit goes from $185 a month to $259 a month. They did what's called a QCD. So a QCD allows them to donate money out of their IRA directly to the charity of their choice, which kept them below those limits. So I know that's a powerful strategy. If you're above age 70 and a half, you can do QCDs. But especially if you're at RMD age, required minimum distribution age, you should be looking at, if you're already giving the charity, why not do it in a way that really benefits you and impacts you?
Benefits both.
Yeah,
Right.
you get the benefit of both. The charity's getting the money tax-free regardless. You're not paying taxes on that money that you didn't necessarily want to receive, that's bumping you through different income brackets and income limits. Again, I go back to what Brandon mentioned earlier about having the team approach, the integration. We like when people retire early here. We've had people retire at 55, and we've helped bridge that healthcare gap along the way through tax planning. So I think all of that is really, really good stuff, really powerful stuff. So hopefully people appreciate that.
It's something that I want to say just in going off the wealth management plan is the numbers we read here are off of the 2025 IRMA rates. So number one, the income may raise, and so may the brackets. So we know that the Part B is definitely going to raise. So the 106 to the 133, those may adjust. So you may be able to take more money or do things. Again, planning, getting with these guys, and knowing your options.
Yeah, that's a good point, because these numbers don't come out till November. This podcast will air before then. We wanted to make sure this was out before the annual enrollment period so we could get our listeners some good value information there.
Yeah, and we will have a resource. So once all these numbers come out, Joe, I know we'll be sending emails and letting, all of our clients know what those numbers are going to be and what that's going to look like. So that should be coming out soon.
Yeah, 2026 updates on the way.
Yep, they'll be coming. And as we finish this off, Joe told me he was going to be Spider-Man for Halloween this year, and he told me he'd give me some of these. So.
Yeah. Yeah, the Incredible Hulk in there.
That's it, guys. Thank you for another episode of Capitalize on Retirement. We hope you enjoy it. We enjoy doing this, so we appreciate you, Joe, Brandon, and that's it. See you in a couple weeks.